Before we get started, I'll introduce myself. My name is Olugbeminiyi Idowu, or Bemi for short, as most people call me. I run a company called Token Drum Communications, and we help businesses innovating across Africa to get more effective publicity for the work they're doing. But I'm not here to talk about myself. You're here to listen to what these wonderful guys on the panel are here to talk about today. So before we get started, I'd like to invite everyone to introduce themselves. I'll start from my left with Kevin, and I'll work our way down this part of this side of the panel. Kevin, you first.
Thank you, and good afternoon all. My name is Kevin Kigima-Ng'ang'a. I am the country director for Verto. Verto, we are a cross-border payments platform regulated in 6 global jurisdictions. We help businesses move money across 170 markets and in over 50 currencies. We're really looking forward to engaging across how we can scale up cross-border transactions and especially helping Africans access global markets, global liquidity, and new markets across the world. Thank you.
Hi. Hi, everyone. Good afternoon. I'm Unini Campbell, the Chief Commercial Officer at BudPay. BudPay is a globally focused payment solution provider that basically enables businesses and business owners to process transactions seamlessly within and beyond borders. For our international merchants and large enterprises, we're able to provide the opportunity for them to connect to their African markets and African customer base, while for our local merchants and SMEs, we're able to provide an opportunity and solutions for them that propels them into new markets and allows them to expand beyond their primary geographical location. We're currently operational across Nigeria, Ghana, and Kenya, as well as have business offices in the UK and China. Thank you.
Thank you.
Okay. Hi, everyone. My name is Uzoamaka, Okoro, and I lead the operations team at Fincra, majorly in partnerships, market expansion. Fincra is basically a payment platform that enables businesses accept payments and make payouts to different markets, Nigeria, Ghana, Kenya. And we also offer cross-border solutions within these markets and beyond. So that's speaking to Europe, US, and other regions as well. Thank you.
All right. Hello, everyone. I'm Zawadi Bushoki, Head of Customer Support at Yogupay. Yogupay is a modern platform for cross-border B2B payments and remittances. We have operations in Ghana, Nigeria, currently, and soon Kenya. We also have operations in UK and Canada. Our team is dedicated to breaking down financial borders and connecting the global economy one transaction at a time. So we're here to simplify all your international transactions through our secure, efficient, and user-friendly platform. Thank you.
Excellent. So now that we know everyone on the panel, I think it's very useful before we start the conversation that we set the context straight so we have a clear idea and we are all on the same page to know what we're talking about. So today we're here to talk about scaling across financial borders. So I think it would be useful for us to just start off by giving a brief overview of what the African business landscape looks like, just so that we're all on the same page and we can have a conversation from that point. So to get us started, I'll start with you, Unini. We'll work our way down this way. We'll do ladies first this time, and it will come down to Kevin. So Unini, you want to go first?
All right. Thanks, Bimi. So in terms of the African business landscape, the landscape is quite dynamic, right, and diverse. Today, in Africa, Africa is a home to about 54 markets with varying regulatory frameworks, right, political structure, in terms of their level of development, are very different. And this poses both challenges as well as opportunities for the continent in terms of cross-border payments, right? In terms of when we talk of what's the current situation today, the situation today can be characterized by, when you talk about cross-border trade, you can talk about the logistical challenges that we have. You could talk about factors like currency volatility, right? You can talk about the complexity in terms of the regulatory environment. However, we've also had a few initiatives that have come up to sort of help to navigate and manage these challenges. When we look at the AFTA initiative, that's supposed to help to streamline these challenges and, sort of push forward in terms of cross-border payments. While this was launched in 2021, we can probably say that as at today, we're still not particularly seeing the realization of this particular initiative. And that's because we still have to deal with what it means for all the countries to cooperate, right? We still have to deal with the fact that across the different markets in Africa, you have divergent technical standards, you have cumbersome custom and border processes and procedures and things like that. So to fully address these challenges that we have in Africa today, we would need the governments, businesses, multilateral organizations to really come together and find a way forward. That being said, we have actually made some progress, given the fact that we've had technological solutions come up. I mean, we have digital platforms today that allow people to extend their businesses beyond their primary geographical location. Where as an e-commerce merchant, I can afford to sell, maybe in Nigeria, I can afford to sell to people in Kenya and in Ghana and in Uganda. We also have digital payment solutions like BudPay that sort of allows and enables businesses to collect and make payments to their customers, to their suppliers, to their vendors and partners across and beyond the location where they are. Thank you.
Thank you. Over to you, Uzo.
Okay, very solid points, Unini. So just to add to that, and speaking from a cross-border perspective, right? When we think of cross-border payments, right, I think people often get this a bit mixed up. So when we say cross-border payments, it's actually, we're looking at two different kind of flows, right? Remittance and trade flows, right? And of course, I'm speaking to this because it's very relevant to the current space that we are and in the African space and the challenges that businesses are facing. So regarding remittance is just simply individuals receiving inflows into their accounts, right, from the diaspora. And then with trade flows, it's speaking specifically to the financial flow relating to businesses dealing in export and import. So what are the challenges that companies and businesses are currently facing? You're seeing now that we have more. So first of all, there's actually an imbalance in our trade flows, right? Especially within Africa. We're having more imports than exports. And that's basically putting a lot of pressure on our currency. So you see businesses, right, then seeking, especially businesses in the trade financial flows, right, it's seeking currencies, foreign exchange currencies, to then make their business, to support their business in supplies, in terms of invoicing, and all of that, right? So currently, we see a lot of business actually going through that. I mean, look at Nigeria, for instance, and we can also say the same for Kenya, right? We're having increase in FX costs just because of this imbalance in our trade flows, right? So, well, how can we actually solve that? How can we, bridge that balance? Say, for instance, a business has to import funds, basically import goods, right, and has a cash flow of, let's say 50 billion, has to use 50 billion naira, yes, to fulfill their obligations, right? The remittance we're receiving in the country is not up to the same size as the obligations we have for the trade flows. So yes, I think currently we have about, the remittance flows are about 5 to 10, or rather the trade flows are about 5 to 10x the remittance flows, right? So you're having remittance flows. So we get the remittance flows, but it's not enough to fulfill the trade obligations for that business, right? So, of course, we're now asking, how do we fulfill that gap? We're seeing things like, that's why people actually refer to things like foreign direct investments, of course, revenue earned from other exports like crude oil, flowers, for instance, in Kenya, right? But even with all of that, there's still a shortfall, and there needs to be that, we need to kind of close that gap because if that's not closed, we're still going to be seeing that pressure on the currencies. And things like, of course, we've mentioned it, the CBK director also mentioned it, enabling partnerships within African countries, right? If you look at Europe, for instance, most of the trades that happen within those countries actually happen like within the borders of those countries. They happen within the borders, and of course, this enables and reduces, they don't need to seek foreign exchange, right? So enabling partnerships like within Ghana and Nigeria, right, close to our borders, it reduces the reliance on USD and foreign exchange, and definitely also helps us to increase our rails and liquidity for businesses. And this basically like reduces the reliance on foreign exchange and helps to solve that problem in a bit. So this is just to say that we currently have an imbalance in our trade flows, and actually creating more partnerships within the African ecosystem, the African continent in itself, would actually help to reduce some of the pressure we're seeing on the currency, which is currently affecting business as well. Thank you.
Thank you for that, Zawadi.
All right. Just to add up on what my fellow panelists have mentioned, I think in recent decades, Africa has really embraced opportunities. All right, and we've seen a shift towards, regional infrastructure and, regional infrastructure as well as, economic cooperation, right? In addition, we've also seen, technological advancements, right? We have now digital payments and mobile money. M-Pesa is actually a household name in Kenya, right? All these have actually increased accessibility and reduced the cost of cross-border payments. However, even with these opportunities, there are still challenges, and as I mentioned, for one, Africa still has a low income, all right, for many people. So that creates challenges when making profitable business models, right? There's also the issue of regulations. Regulation in Africa is still very fragmented, and it's evolving across, different paces in different countries, which can also be hard to, it can make it challenging for businesses to scale across different borders. But even that said, I think looking ahead, investing in proper infrastructure, right, harmonizing regulations, and also promoting digital accessibility can really enhance and promote cross-border payments in Africa and across the world.
Thank you for that. And finally, Kevin.
Maybe I can tackle maybe the second part of innovations. I think one thing that we've seen in the market is work with what you have currently. So you find that in certain markets, they have a less developed payment system, for example, and yet there's an opportunity to open up business trade flows activity. So one of the innovations that we've seen is working with local banks and partnerships so that you can be able to help some of your customers, for example, collect proceeds of, say, sales, proceeds of exports to be a lot more efficient. That does two things. One, it helps cross-border payments improve on turnaround time around payments. Two, it improves trust element because I am able to demonstrate, for example, that I can collect in your local currency. That has given a lot of businesses in Africa the ability to grow their trade flows. A case in point is, for example, cross-border trade between Nigeria and Kenya. If you look at the statistics 10 years ago, does not match trade flow. But now you're seeing a lot more services flow between the two markets. And why? It's because a lot of the fintechs in these markets are using, whether it's NIBS and connecting with M-Pesa, or it's NIBS connecting with RTGS. Those innovations with exactly what you currently have is creating opportunities for businesses to increase cross-border flows.
And I really like a few things you said about collaboration and working across different countries. I'm going to come back to that in a minute, but there's a present question that's on my mind, that I think is on the minds of most people here, and it's a conversation about currency volatility and different currency regimes, because we know how this impacts businesses and trading across different countries. I'm Nigerian, so let's not go too far down the conversation about currency volatility at the moment. But I want to start with Kevin and Unini on this question about currency volatility, and also if you can touch on the reality of different currency regimes across African countries and how that impacts the ability to trade across those countries. So I'll start with yourself, Unini, if you don't mind touching on that, and then we'll come back to you, Kevin, to kind of add some more points.
Okay. So currency volatility, I mean, I'm sure everyone in this room has a thing or two to say about this, right? Because beyond how it impacts businesses, it also, I mean, the impact transcends into our personal, individual lives, right? So back to the question now, how does this affect businesses? One major way is how it sort of affects the revenue value, right? What do I mean? So for example, recently we were having a conversation on a lighter note, right, at BudPay, and just how with the sales and revenue team, and how, because a lot of the businesses within the fintech startup space are funded in FX, right? So when you're funded in FX, to justify and account for return on investment, you would also do your budgeting and planning, in FX. And so you have the budgets at the beginning of the year in FX, but every time we have to review performance and revenue that's been generated, the rate at which you're accounting for that keeps changing. So, what do we do about that? And of course, you can see the frustration on people's faces, especially the very energetic salespeople. So, so that clearly affects what the value of revenue that's generated by the businesses in this market. Another major impact of currency volatility is on the cost of doing business. There are businesses, especially businesses today, who have some form of costs that's being paid in FX. I think it was on one of the panels yesterday where Fez had talked about how this had affected them so much that it forced them to quickly expand into markets that allow them to start to earn revenue in USD or in pounds, right? So this is also a major impact. I'm not sure how many of us were following the thread on Twitter or X about how even the tools we use as startups have gotten so expensive by the time you calculate the rates in your local currency. I mean, on one hand, that just means it's time for us to start to develop these tools, local options for these tools, right? But that's a conversation for another day. But yeah, the currency volatility also affects the cost of doing business. I mean, in Africa, a lot of the markets where, many of us operate, we're highly import dependent. And what that means is, if we're highly import dependent, volatility in currency translates into inflation. Inflation translates into, or puts more pressure on people's income. And when you have more pressure on people's income, it starts to beg the question, should we increase how much people are paid, right? And so you have that to deal with that on one hand. And on the other hand, as a business, you're battling with the fact that the value of your revenue, right, also seems to be decreasing. So as my people would say in Nigeria, it choke, right? This issue of currency volatility is, it's significant, and it's really being felt by businesses across the continent. Now, just to touch very quickly on how technology helps, it's very important to clarify first that currency volatility is out of the scope of technology. It is majorly a market and macroeconomic issue that needs to be dealt with, with a brilliant mix of fiscal and monetary policies. However, technology can help in how businesses can navigate, some of these challenges. For example, like my co-panelist mentioned about remittances. Decades ago, or let's say a little over a decade ago, it would take you several days to a week for you to successfully remit payments to Africa, right? But today, with technology, we're able to do this in, same day, T+1, T+2, depending on the markets. And that's because, there's a lot more maturity in terms of the technological infrastructure and just even the maturity of the financial systems. And, touching on this point is also quite important to me because it highlights a major competency of BudPay that provides the rails and solution to large global remittance companies to be able to terminate millions of dollars of payments on a daily basis to local accounts and wallets. Another way that technology helps is basically in terms of the ease, right, for these transactions to be done. A few years ago, a lot of the processes from KYC processing and all of that were quite manual. But today, with technology, this process has become automated and has become a lot more seamless and faster.
Thank you. Kevin, you want to add to that?
Yeah, thank you. Currency volatility, couple of things I've seen, especially in the last 18 months, that businesses typically didn't anticipate. So you have a payable requirement, whether you're, for example, you're a steel importer or you have software purchases that you make. What you typically find is ordinarily you may have negotiated trade terms with your supplier. Maybe it comes out to 30 days and you need to make that payment. Now, with currency volatility, two things have happened. Number one, significant drop in dollar access affects your cash flow, meaning you've got this supplier, you're holding local currency, you don't have the hard currency you need to pay. So what do? You start negotiating extended trade terms with your supplier. That does two things. It impacts your supply chain. It also as well as impacts your cash flow because the traditional solutions available in African currency markets, such as hedging solutions, forward exchange transactions, are extremely expensive. And you're talking about between 15 and 20% cost of your notional just to hedge out even a 3-month position. Now, if your cash flow has been impacted, your supplier relationship is defrayed because he's not understanding why can't you pay me in 3 months, and you tell him I am sitting on local currency, I can't access hard currency because of this currency volatility, then what happens is you go back to your bank and say, okay, the traditional bank give me an overdraft or a dollar facility so that I can pay here my shillings or my naira as security. That increases your financing cost because you've now added an interest cost onto your balance sheet. Now, you still owe the supplier funds. So on your balance sheet, as the currency is volatile, you still have a transitional risk. So what are we doing at Verto to solve some of the solutions? What we've done at Verto is we work with, for example, large manufacturers based in the UK that have local suppliers that they, for example, provide products into. So my colleagues here have talked about, we have a large import bill. So one of the solutions we do is we've got what you call local currency collection solutions. So at the point of time where a local supplier needs to pay an international supplier, we've partnered with the international supplier and tell him, we can give you hard currency and we can collect for you in local currency. So what does that do? It now localizes the supply chain element, and we partner with the local distributor, the local supplier, and eliminate that exchange risk exposure to him. So at any point in time, we now have distributors in about 20, 25 African countries that are comfortable with saying, I'm happy to go into Cameroon, I'm happy to go into Tanzania, I'm happy to go into South Africa. Why? Because I understand at the supply chain level, a partner such as Verto would be able to help me extract my foreign currency receivable using the Verto platform. And we have gone a step forward, and now we are offering API integrations into these manufacturers' ERP. So at the point of time that they want to invoice, they're able to get a local currency option for the supplier to pay. That has seen us grow volumes from real sector flows probably by about 30 to 35% because we're now solving a real problem around currency volatility.
Interesting. Let me just double click, as you say, on what you made a point. So just to be clear, So let's say I'm a manufacturer in London and
Yep.
I'm like my customer is a business operating in Nigeria.
Yep.
So technically, the Nigerian business, if they're not able to access Forex, can pay like a Naira equivalent in Nigeria. And
That is correct. So the Nigerian purchaser does not have to worry whether the Naira is going to 1,600 or 1,400. They get a Naira invoice. Our UK supplier has a Naira collection, and automatically we consume that Naira and give him hard currency in his home market.
Excellent. That makes a lot of sense. Just moving the conversation because I'm conscious of time, and there's a few things I want to touch on before we finish. The next thing I want to touch on is a topic that I have mixed feelings about because it feels like a topic that we've been discussing for a very long time, and it's the topic of financial inclusion. And the reason why I feel like we still need to have that conversation is because on the other side of financial inclusion is effective financial participation, and I believe there's an intersection with cross-border trade and financial inclusion. So for this question, I'll put it to Uzo and Zawadi. If you guys don't mind touching on that a little bit. So the question is really about how can improvements in cross-border payment infrastructure, how can that impact or deliver more effective financial inclusion, or let's just call it better financial participation for businesses in particular?
Okay, thanks for that. At the heart of financial inclusion is really just access, like increasing access to financial services for people, right? And when you think about what cross-border the space is about, first of all, like market players, like personal, the market players like MoneyGram, Western Union would typically have like cash pickups agents, right? Wherein you're able to, through Western Union or MoneyGram, you're able to send funds from the diaspora to Nigeria or to Kenya or to Ghana, right? To anyone really, and then the mode of collection is really cash pickups, right? And when you think about this, the time it takes, the speed, the efficiency, like all of that captured in one, right? It poses a challenge. And of course, like now with the rise of digital remittance payment companies like Nala, which is a customer of Fincra, right? You're able to easily remit funds into the country and then make last mile payout transactions. So that is basically saying the person, typically before you would have taken, say, 5 days, 7 days to get funds across to someone in a rural or local area. But now with the digital remittance company, that basically reduces the transaction time significantly. So that's like probably, I mean, you literally get the funds in seconds, right? So like that's how we see technology really coming in to make payments more efficient and include people in the financial space, right? And what this also does really is to incentivize people to create accounts. So for instance, I mean, because people are now, they're seeing the advantage of the time, one saves with this digital remittance apps, you're able to, you then go on to open a mobile money account, right? Make those payments, you're able to receive money in, send funds, pay for bills, pay for insurance. So I would say like that's really how it helps, right? From my perspective, your basically access to digital payment services and faster payments as well.
Excellent. Oh, by the way, Kevin and Unini, if you guys want to jump in as well, but I'll let Zawadi share her thoughts first, and then if you guys want to add in on that question as well.
All right. I think there's a panel here yesterday, and someone was saying they no longer want to hear the concept of financial inclusion. I found that interesting. But financial inclusion has really led the widespread adoption, right, of digital payments, and this has transformed the payments landscape. And actually, Africa is at the forefront of this change, right? And what that means is that someone in UK can log into their Yogupay platform, right, for example, and send money to someone in the village here in Kenya, and even without the fact that they're using a smartphone, right, even through their feature phone, they can easily access the funds, right? So this means it is fostering greater financial empowerment, all right, and inclusion to the underrepresented and underserved individual who may have limited access to traditional banking solutions. So I think financial inclusion is a mandate to our space in cross-border payments, but I've seen significant improvements in Africa. Yeah.
I'd like to.
Do you want to join?
Yeah. Okay, thanks. So just to add to that, as we're talking, I remembered, I think a little over a year ago, where I was invited to a roundtable discussion that was an industry roundtable discussion that was led by MasterCard. And the focus of that conversation was to see how we can unpack and figure out how to bring in a lot of the SMEs and small businesses into the digital payments space. Because, I mean, while we, yes, talk about the proliferation of digital payments, we still have a lot of the players, especially in the informal SME space, that make up a huge, significant part of our economy that are still playing outside of this space. So, Bimi, when you talked about active financial participation, I think in terms, when we try to break down what were the reasons, I think a major part had to do with the cost of payments, right? Which the presentation from CBK also pointed out. So if my margins are so thin, I mean, I have like a small kiosk, and my margins are so thin, does it make sense for me to then adopt a digital payment solution that charges me a certain percentage on my transaction? So that tends to be a deterrent. I mean, in some cases, maybe also tax avoidance. But I mean, these are some of the reasons. But I think at the end of the day, it boils down to the fact that there isn't a very strong value proposition that justifies the cost and the effort that these small businesses need to put in to adopt digital payments, right? And when we then talk about cross-border payments and just being able to transact beyond your primary location, I think if that is really farmed and harnessed properly, it can serve as a strong value proposition for these businesses to then adopt this solution, right? Because now it gives them an opportunity to go beyond where they are and, fulfill whatever global dreams that they might have about their businesses. So, in summaries, that's the idea of cross-border solutions can actually serve as a strong value proposition to justify whatever cost or effort it would take for the small businesses and pull them into active digital financial participation.
Yeah, I really like that. Kevin?
I think the way I look at it is financial inclusion is an evolution of a process. The first step is to get people into the system and to collect payments. Then I think the next step is to start looking at, from a lifestyle perspective, what are the verticals that financial inclusion needs to evolve into. What am I talking about? I'm thinking about a cross-border payment, a remittance play into paying, for example, national health insurance, paying into an educational fund, paying directly into a school. So if I have got dependents in Kenya or in Tanzania or in Nigeria, I'm seated in Canada, I think what cross-border payments now needs to evolve into is not just paying money into a mobile wallet, is to understand what are the consumer patterns that mobile wallet can be used to. And now that financial inclusion now evolves into financial health, wellness, financial, looking at a better standard of living. So what are the technology companies today doing to get people better, for example, into the healthcare systems? How are people getting into the educational systems? How are people getting into the content creation system? If I am in the US and I want to pay a TikToker, why should I go through multiple payment gateways and that sort of thing to pay somebody? I think that's, for me, is what financial inclusion now needs to start evolving into. We've done an excellent job around getting people into mobile wallets, getting people into that, but what more can we give those people from an emerging development perspective?
Yeah, I really like that. I'm going to come back to you, Unini, actually, because there's something you mentioned that leads very nicely to the next question I have, and it's about creating a viable value proposition to attract like small businesses into adopting digital payments and digital solutions generally. And I know we're here at Africa Tech Summit, and we all want to talk about technology, and everyone on this panel is a technology player. But I know that beyond technology, I think there's a lot more that goes into, there's a lot more that goes into effective cross-border transactions beyond the wonderful technologies that you guys undoubtedly have. So I want to touch on that just a little bit, just to touch on, so basically beyond technology, what are some of the other solutions and processes that need to be in place to drive more effective cross-border growth for businesses in Africa? I'll start with you, Unini, because of the point you made, and we'll work our way around the platform.
Oh, okay. I was going to just jump in. All right.
All right. You're right. I mean, beyond the technology infrastructure, right, there's the solution. That is, how are we solving the problems of today? A couple of, areas of challenges and great opportunity that we've identified at BudPay and are really working to solve. One is the area of vendor payment. So we've all mentioned how import dependent we are, as in this part of the world, and so that means that a lot of the small businesses import what they sell, right? Their goods, products, whatever it is. And that also means that there's a huge need and market for them to be able to seamlessly make payments to their vendors, their suppliers, whatever manufacturers from wherever it is that they're importing from. That today is a huge market. There's a huge challenge there that a lot of small businesses are trying to figure out. And at BudPay, and I'm also aware a few other stakeholders are really working through partnerships with existing commercial banks, right, and established money transfer institutions to figure out solutions for this segment and for these SMEs to be able to make these transactions possible. Another major area today, Africa has become a major exporter of talents, right? So we export talent across Africa, that is other African markets, and as well as beyond Africa to other countries in other regions. And what that means as well is that there's a huge need for the talents to be able to receive remuneration in their own local jurisdiction or where they reside. So that's also a huge market in terms of the right partnerships, the right frameworks to be able to set that up that allows for the seamless movement and sort of transfer of those funds from wherever they sort of provided their service or their talent to where they currently reside. And this, like you've said rightly, goes beyond the technology infrastructure, but even to deep collaboration, the right partnerships, figuring out the right pricing that even makes that transaction economically feasible.
Yeah. Non-technology things. So at Verto, we have something called Verto Connect. It's not a technology platform, has nothing to do with tech, but what we've done is we've identified markets that need connecting. A case in point is we have flour exporters in Kenya, for example, that would export traditionally to the UK and Europe. What we've done at Verto Connect is we connect some of these markets, some of these exporters into new markets in Africa. So a case in point is Ghana imports most of its flours from London. So why not connect our Ghanaian customers to a Kenyan flour exporter? That doesn't need technology. So what we've done is we're trying to make markets connect in new places. Just recently, we opened up an Angolan customer to a Kenyan flour exporter. The other day, we are looking at helping a Kenyan business import stuff from Cameroon. And that doesn't need technology. We're just connecting market players. And I think that's part of what we need to do as Africa. We need to find solutions that work for us as Africans. Technology will only be an enabler at the tail end, but we need to do that extra effort and say, okay, what do we need to do to help Africa generate more connectivity? Technology is one part, but we also like to help markets connect as well.
Excellent. Uzo and Zawadi, if you guys want to jump on
Okay,
quickly.
yeah, I mean, just to add to that briefly, I mean, we've all spoken well. I love that the resonating theme is partnerships, and truly, it shows that partnerships are really the foundation, even beyond the tech tools, right? Partnerships with local banks, partnerships with, other payment processors within other regions, like just forming those partnerships to meet your customers in other regions are really beneficial, right? So that's one thing. I love that he also spoke on Verto Connect. It's also something that we at Fincra do, connecting businesses, connecting our customers and enabling them leverage each other's services, right? Just breaking that barrier and also offering services to them at discounted prices. And that also speaks to partnerships, right? And of course, like trust and reliability. At the end of the day, your customers would use you because they trust you. So how are you going on to ensure efficiency of your system, right? The safety of your data, the safety of your systems. How are you ensuring trust with the regulators? So those are the things to consider in addition to that. Thank you.
Zawadi quickly, and then we'll open the floor for questions from the audience. But Zawadi first, if you want to add anything to that.
All right. Can you hear me? In addition to that, I think also access to financing options such as venture capital, right, to help you also, with your expansion plans, right? I'd also speak a bit about, conducting a thorough market research. You also, when you're scaling, you also want to find out what the particular region really is in need of, right? The truth is, your product, the way you've tailored it, may not always work across different regions. So it's very important to conduct a market research, find out what the people want, how they want it, right? So that you can tailor your product to local preferences.
Yeah, makes sense. So at this point, I'd like to open the floor for questions from the audience. But while we wait for questions from the audience, I would like to just give the panelists a heads up that I would like to invite you to give your final thoughts to close out the conversation. But before we get to that point, any questions from the audience from the conversation we've had? Going once, going twice? Right. I guess we move straight to closing thoughts then. So we'll start from that end of the panel and work our way up this way. So Zawadi, final thoughts from yourself on the conversation?
All right. Imagine a world where cross-border payments is as easy as sending a message, right? Where we can easily, everyone, individuals and businesses can seamlessly participate in the global economy. And I think this vision can become a reality, all right, by harmonizing regulations and effective collaborations from various industry leaders. I think we can actually achieve seamless cross-border payments in Africa and beyond.
Thank you. Uzo?
Okay, just to summarize and just drawing from what I said previously on partnerships, partnerships go a long way in scaling financial borders. Partnerships in terms of regulatory compliance, thinking of how we can put all those together, relying on each other really to create the system that we want to see, to create the change that we want to see, right? Just leveraging those innovations. Also, of course, seeing how we can really drive business growth and collaboration within our countries and within Africa continent as a whole. That will really help in scaling across financial borders. Thank you.
Okay, so we really kind of emphasize the role of partnerships, collaboration, cooperation. And when we think about the chain of cross-border payments or transactions in itself, starting from the sender, the sending entity, the receiving entity, the entity or the bank that helps to terminate, the players within the local markets, it's all built on collaboration, integration of systems. And so for us to continue to have a more efficient cross-border payment experience, it basically just calls for deeper collaboration and partnerships across the different players. And we also cannot leave out the role of the governments, the leadership of the countries, because a lot is also rides on, sort of having that integration of and cooperation amongst the government from a regulatory standpoint, procedures, standards, expectations across the different markets. That's also important. So I'll say it's, we really just need to keep pushing as an ecosystem. We need to keep pushing, keep collaborating, and partnering our way to a better and more efficient cross-border payments experience.
Last but not least, Kevin.
I think my parting shot would be, as we continue to build, whether it's cross-border payment technologies, I think we really need not to forget the critical bit, is we need to solve real-life problems. Africa has got a lot of opportunity. I'm sure in a lot of the presentations over the last day, yesterday, talked about the numbers, the demographics. There's a lot of real-life problems we can solve. Cross-border payments is one of them, but it's just an enabler to solve real-life problems. So my parting shot is to encourage us to think about Africa's prosperity and what we want to build, and that would include collaboration, it include partnerships, but it also means that we need to understand what the consumers or the purchasers of whatever we are building, what are their pain points. I think that's a critical part that we need to always remember, that it's not all about the VC element, it's not all about the VC world, it's about how can we solve real life problems for Africa's prosperity.
And there you have it. Thank you so much for your time, guys. A quick recap of the conversation. We've spoken about currency volatility and the impact on businesses. We've spoken about what needs to be done beyond technology. We've had a great conversation, if I do say so myself, about how businesses can scale and some of the technology solutions and other range of solutions that can help businesses scale beyond their borders in Africa. So we can put our hands together for our panelists. Thank you all for spending time. I know food is waiting for you out there, so appreciate you guys waiting around. But thank you so much and enjoy the rest of your day.